Have you ever noticed how little interest your savings account earns these days? Banks are barely paying anything on cash deposits. Meanwhile, inflation keeps chipping away at your money's buying power. There's gotta be a better place to put your hard-earned cash so it can work harder for you, right? Well, I'm glad you agree. While having cash in the bank provides some stability and flexibility, it offers very little growth potential. So, in this video, we'll discuss 6 different assets that can provide better returns and safety compared to just having plain old cash. These options range from precious metals like gold that have been used as money for centuries to more modern assets like cryptocurrency. Each one has its own risks and rewards, but generally they offer more upside than cash sitting in a traditional savings account. Cash is still important for things like emergency funds or short-term goals, but for longer-term growth, we need to look beyond the bank. So let's go ahead and dive right in. I think you'll find this information useful since banks are really doing savers no favors these days. Alright, let's start by talking about precious metals, specifically gold and silver. For centuries, cultures and economies around the world have used gold and silver as forms of money and ways to store value. There's some really good reasons why they're still excellent alternatives to just holding cash today. One major benefit is that precious metals provide an inflation hedge. With central banks printing so much money these days, inflation is a real concern for a lot of investors. Historically, gold and silver tend to rise in value along with inflation over the long run, while cash in the bank consistently loses purchasing power. Another cool thing about precious metals is that you can physically possess them, unlike money in a bank account. If you have gold or silver coins in bars at home or in secure storage, it can be extremely difficult for governments to confiscate them. Gold and silver are also recognized and valued as real money all throughout the world. That intrinsic built-in value persists across borders and cultures. With cash, you're relying on the stability of your particular government and banking system. When you personally hold precious metals, you don't rely on any bank's promise to give you your deposited money. So you avoid counterparty risk, since it's just you and your metals. Now, in terms of actually investing in gold and silver, there's a few different options. One is to buy physical coins and bars from government mints like the US Mint or private precious metal dealers. Stick to well-known sovereign coins that are recognized worldwide, like the American Gold Eagle or South African Krugerrand. Another way is using precious metals ETFs, which are exchange-traded funds that are backed by physical gold and silver stored in vaults. With funds like GLD and SLV, you can conveniently buy shares that represent real gold and silver you could take possession of if you ever wanted to. You can also buy shares in mining companies that produce precious metals. Their share values tend to rise and fall with gold and silver prices, but just make sure to research the companies closely, as some are better managed than others. Alright, let's move on and talk about real estate. Real estate is right up there with precious metals in terms of being a well-proven asset for building long-term wealth. There are a number of benefits that make real estate a solid investment. For starters, quality real estate almost always appreciates in value over the long run, providing nice growth on your invested capital. In many markets, residential and commercial real estate tends to gain value even faster than the rate of inflation over time. Another benefit is that rental real estate can provide regular cash flow in the form of rental income. You can also access equity built up through mortgage paydown and appreciation via cash-out refinances and lines of credit. Real estate investors also enjoy certain tax advantages that you don't get from other assets. Big deductions can be taken for expenses like mortgage interests, property taxes, maintenance, and depreciation. And you can defer capital gains through 1031 exchanges when selling investment properties. During inflationary periods, rental income and property values tend to rise. For example, if you have fixed-rate financing in place, your mortgage payment stays the same so your income rises in real terms. Finally, real estate provides opportunity for leverage through financing. Banks are willing to lend 50%, 75%, or even more of a property's value. This gives you a lot more exposure than just the amount of capital you personally invest. As far as types of real estate investments, some of the most common are traditional rental properties like single-family houses, multi-family apartment buildings, vacation rentals, commercial buildings, farmlands, etc. Identify markets with strong long-term economic and population fundamentals. Real estate investment funds or REITs, which allow you to invest in professionally managed portfolios of real estate assets. Publicly traded REITs offer easy diversification into real estate and trade on major stock exchanges. Real estate crowdfunding websites are a newer option where investors can browse and provide financing for real estate projects in return for equity stakes or interest payments. This opens up opportunities that traditionally had high minimums only accessible to the wealthy. And for most people, the home they live in is their single biggest real estate asset. Paying off the mortgage provides forced equity that builds as you pay down principal and the property appreciates. No doubt about it, real estate offers some of the highest average returns of any asset class. But it also takes more active management than stocks and bonds. Illiquidity is another downside, as real estate can't be sold instantly like shares of Apple stock. But for those willing to learn and put in the effort, real estate can generate very rewarding returns. And moving on, let's talk about the stock market. When you buy shares of stock, you become a fractional owner in publicly traded companies. And here are some key reasons why stocks deserve consideration in long-term investment portfolios. Well-run companies have the potential to grow revenues and earnings rapidly as they scale. Stock prices over time reflect the growth in the underlying business. Just look at Amazon, which has produced over 100,000% returns for investors in just over 2 decades. Many established companies also pay out a portion of profits earned each quarter to shareholders in the form of dividends. Not only do dividends provide a stream of income, but the dividends themselves tend to grow every year too. Alright, last but not least, let's talk about how investing in yourself can be incredibly lucrative. It's easy to think of investing as something we do with our money, but don't forget that investing in yourself is one of the best investments you can make. So here are some ways to maximize your personal return on investment. Formal education like college degrees, technical certifications, boot camps, and so on boost your knowledge, skills, and credentials. Many fields now require certain designations just to get your resume looked at. Seminars, online courses, mentorships, training programs. There are endless ways to actively expand your abilities through learning. Being a lifelong learner makes you more valuable professionally. Invest time and money into starting a side business. With enough hard work, it could eventually grow into a full-time gig and replace your day job income. Networking with others in your industry allows you to build key relationships, especially with those further along in their careers who can provide guidance. I hope this video gave you a solid overview of assets beyond just cash that can put your money to work harder for you. Please let me know which asset class interested you the most by leaving a comment below. And if you found this video helpful, hit the like button and subscribe to Prosperity Pulse Point to stay updated on future personal finance topics. Thanks for watching, and I'll see you in the next one.